European Central Bank President Mario Draghi's biggest problem might be just about ready to fire off an angry tweet that sharpens the euro's long winning streak against the US dollar and complicates his efforts to ease out of 3 years of unpopular monetary policy as the region's economy recovers. President Donald Trump's at times chaotic handling of healthcare, tax reform, trade policy and overall White House discipline has firmly reversed the greenbacks' post-election gains and lifted the euro to a 2.5-year high on foreign exchange markets. That's slowing the rate at which eurozone inflation can return to ECB's preferred just below 2% target as imported goods, especially energy, become increasingly cheaper and hold down annual price rises. Small investment, big potential. The Street's Stocks Under $10 has identified a handful of stocks with serious upside potential. See them free for 14 days. In most economies, and under normal circumstances, that would be good news, as domestic currency gains would signal overall confidence in GDP growth and the anticipation of modestly higher interest rates. That's not the case in Europe, however, where economies outside the core of the currency area, loosely defined as Germany, France, Austria and the Netherlands, still struggle to pick up the pieces from the region's 2012 debt crisis that spawned Brussels-led interventions in Spain, Portugal, Ireland, Cyprus and Greece that ultimately cost European taxpayers nearly €500 trillion, $595 billion. Slow growth and existential bets against the single currency as a concept, and the European Union as a project, hammered investment, jobs and wages and drove consumer prices into a near-deflationary spiral that is only just now being reversed. The ECB's role in that Houdini-like escape can't be overstated. An unscripted Draghi promised a roomful of investors in London in July 2012. Without the support of his rate-setting colleagues or consultation with European lawmakers, to do whatever it takes to save the single currency. That commitment gave birth to a controversial project known as Outright Monetary Transactions, or the OMT, a plan that would allow the ECB to buy unlimited amounts of government bonds in the event of an economic crisis. The OMT, which was unsuccessfully challenged by German investors, with the full support of ECB rate-setter and Bundesbank President Jens Weidmann, was soon followed by a negative interest rate on the ECB's deposit facility in 2014 and the ECB's first foray into quantitative easing in March of the following year. Small investment, big potential. The Street's Stocks Under $10 has identified a handful of stocks with serious upside potential. See them free for 14 days. Collectively, the ultra-loose policies have pulled currency area inflation from an all-time low of -0.6% to the now faster, although still tepid, rate of 1.5% as the economy gathers its fastest pace of growth in more than 6 years. But with a balance sheet of more than €2.5 trillion, firming economic growth, rising political pressures and a dwindling supply of acceptable bonds to buy, many ECB watchers have been predicting a definitive signal from Draghi and company that would trigger Eurozone case-long unwind and the gradual normalization of interest rates. The currency's unexpected advance, however, are making those predictions increasingly difficult to justify. The euro has gained nearly 12% against the dollar since the start of the second quarter, rising to a January 2015 high of 1.2047 late last month before pairing that surge to around 1.1905 Monday. And while a great portion of the jump can be laid at the feet of the president's odd tenure at the White House, the dollar index, a measure of the greenback's strength against a basket of 6 global currencies, is down 7.7% over the same time frame. Draghi himself can accept some of the responsibility for his blasé riposte to euro strength in July, when he said the gains had received some attention on the Governing Council. He did little to dispel that ambiguity last month in Jackson Hole, Wyoming, when he focused a speech to a group of central bankers sustaining openness in a dynamic global economy. Small investment, big potential. The Street's Stocks Under $10 has identified a handful of stocks with serious upside potential. see them free for 14 days. Still, with the US dollar's heavy decline, it's amid the longest losing streak in a decade, and the US facing its own mini-series of existential threats in the form of government shutdowns, debt ceiling breaches, trade protectionism and immigration rollbacks, it's perhaps no surprise that investors pile cash into the yen, the Swiss franc and the euro in times of global crises. The task Draghi now faces, beyond appeasing the market's appetite for clarity, is talking down the euro while avoiding any accusations of currency manipulation and reassuring recalcitrant supporters that the billions spent on